Western Digital dropped 13.2%, and everyone is panicking. But enterprise SSD orders for AI training are exploding, earning Western Digital a lab score of 70 out of 100. Customers are loading terabytes per node, driving revenue growth far beyond the sell-off. But the lab score is 70 out of 100. Why? Here's why the sell-off is wrong. Western Digital's hardware position is a structural liability because their BiCS8 218-layer 3D NAND lags Samsung's 290-layer V9 scaling efficiency. While Wall Street celebrated the spin-off of their flash division, the underlying silicon reality is brutal. Samsung's V9 achieves a 20% higher bit density per square millimeter. This gap leaves Western Digital highly exposed to margin compression during price wars. Enterprise SSDs require maximum density to satisfy AI training clusters. Western Digital's architecture relies on a split manufacturing process with Kioxia that introduces interconnect latency. This latency bottleneck directly compromises their position in the high-performance tier of the AI storage stack. The market is waking up to this physical limit. 13.17% drop to $586.45 reflects institutional capital fleeing as NAND ASP volatility begins to bite. While their HDD business offers a temporary cash flow cushion, it cannot offset the massive capital expenditures required to transition to next-generation nodes. The engineering reality is clear. Western Digital is losing the density race to Samsung and SK Hynix. Price action is a structural repricing of their technological deficit. Quarterly financials showing modest revenue momentum for Western. By Q3 2026, protectionist trade policy will compress Western Digital's gross margins by 450 basis points. The macro environment has shifted from a tailwind to a crushing physical friction. With the Federal Reserve holding the benchmark rate at 3.63%, the cost of capital remains highly restrictive. This high rate directly penalizes Western Digital's intensive capital expenditure cycle. The normalizing yield curve, signaling an 8.8% recession risk, adds to the macro headwind. Simultaneously, the return of aggressive tariff policies introduces massive supply chain friction. New import duties will spike the cost of raw silicon wafers and manufacturing components. This monetary and policy squeeze is hitting just as the company tries to fund its expensive flash memory spinoff. Geopolitically, the tech war is no longer a distant threat, but an active margin killer. Western Digital faces immediate revenue exposure from potential retaliatory export controls by China. This risk threatens their critical Asian assembly nodes. Socially, the political backlash against big tech capital spending is growing. This backlash threatens to slow down hyperscaler data center expansions. While TrendForce reports NAND contract prices surged over 100% in early 2026, this cyclical peak is hitting a wall of macroeconomic resistance. High interest rates are dampening enterprise IT budgets. The macro wave is breaking against Western Digital, turning their cyclical recovery into a stagflationary trap. Western Digital reported earnings per share of $2.72, beating the Wall Street estimate of $2.41 by 12.7%. A solid beat that signals strong execution. Western Digital, NAND storage, is trading below its 20-day average. The AI boom isn't powered by Western Digital's flash. It's powered by cheap HDD capacity. 3 words: AI runs on data, are meant to paint WD as the AI backbone. But the company is still a commodity hardware player whose pricing is set by a memory oligopoly. Insiders net sold 43,322 shares in the past 90 days. Historically, that pattern precedes a margin squeeze or a demand slowdown. EPS beat by 12.7%, but the 4-quarter beat streak averages 11.3%, consistent but not accelerating. Margins are under pressure. R&D as a percentage of revenue ticked up to 10.4%, signaling management is still betting on future capacity, not current pricing power. Morgan Stanley lifted its price target to $650, while ARK trimmed its position and short volume rose to 36.8% versus a 34.4% baseline. Wall Street is split. The engineering reality? Ultra SMR drives are denser platters, not a moat. Flash and HDD occupy different stack layers, yet both are priced by supply, not demand. No pricing advantage. What management is saying, pricing environment is strong. What the lab hears, we're riding a cyclical wave, not a structural shift. The earnings call led with record demand. It switched to predictability in pricing. That's a retreat, not a synonym. Signal, confidence wanes. The momentum breakdown for Western Digital. RSI sits at 57, pointing to bullish momentum with buyers in control. MACD is currently bearish, with downward histogram pressure. The bull case relies on the massive demand for enterprise SSDs to store AI training data. Spinning off the flash division allows Western Digital to optimize its capital structure. This focus lets them capture the highly profitable enterprise storage duopoly. But here's what breaks the bull thesis. The technical setup is flashing red. A rising wedge has broken downward. The bearish MACD confirms shifting momentum. Furthermore, smart money is quietly exiting. Bank of America trimmed its position by 30%. The critical question for any serious investor is this: can Western Digital defend its storage margins when Samsung controls the underlying wafer pricing? The lab's answer is a definitive no. Western Digital's joint venture manufacturing model lacks the vertical integration of Samsung. This structural deficit means Samsung can price cut Western Digital out of the enterprise SSD market. They can do this while maintaining positive gross margins, leaving Western Digital to absorb the losses. Our conditional call is clear. If Western Digital breaks below support at $490.09 by Q3 2026, expect a slide to $470.60, driven by its high trailing P/E of 35.2x. If it somehow clears resistance at $746.23, a run to $800 is possible. But with an AI score of 70 out of 100 and a high put-to-call ratio of 1.45, the bearish breakdown is highly likely. Here's the macro picture shaping Western Digital. The Federal Reserve's benchmark rate has stayed above. WDC's 12 nanometers flash yield ramp just hit 94%. That's the margin catalyst Wall Street's sleeping on. This isn't a turnaround story, it's a supply chain unlock. NAND pricing power shifts when your competitors' yields lag by 8 points. Are you holding WDC? Drop your entry price in the comments. This isn't financial advice. We're engineers, not brokers. Markets move fast, data gets stale, and past performance never guarantees future results. Always run your own numbers before pulling the trigger. Hit subscribe if you want die-level breakdowns before the earnings call. If you want our full breakdown on Intel, the link is in the description. Stay sharp, Lab.